It is my pleasure as a partner at Von Greyerz Gold, based out of Zurich, Switzerland, to share this presentation with you today on the hard yet essential truths of rising gold. And my aim today is to add a little bit of math and history to make sense of current headlines. And as we often do in these presentations when Egan and I are together, is give a presentation in English and in German. And I know that many in the audience are German speakers, although, as most Germans know, they tend to speak English better than most Americans do. Nevertheless, and for those who are more comfortable in German, I will do my best to create a brief synopsis for each of these slides in German, despite my, as usual, horrible American accent when speaking German. Nevertheless, it is important to go through these slides and give perspective, I hope to do in both languages. I use the US dollar in the US markets as the primary focus, not because of an American bias, but because of the overall importance of the US dollar as the world reserve currency. And of course, many of the themes on central bank policies, unsustainable, unhaltbar debt levels are no different in the G7 or the European Union as they are in the US per capita. And so the sins of the central bankers, the sins of incredibly high unsustainable debt levels, and what that does to currencies is really no different when we're talking about the Eurozone or the US. But of course, the US is the world's greatest debtor, and the ramifications of this debt are very important. So again, I will make a brief synopsis in German for each slide, but the bulk of this presentation will be focused on the US dollar and US markets, and in English as well as German. So diese Präsentation trägt den Titel Die harten, aber unversiegbaren Wahrheiten des steigenden Goldpreises. Sie verbindet einfache, aber oft ignorierte Signale aus Mathematik und Geschichte, um den aktuellen Schlagzeilen einen Kontext zu geben. So we will go to the first slide, which is the not so hidden elephant in the room. And this is the just extraordinary climb in US debt levels, public debt levels, since the year of my birth to today, right around the time that the US dollar was decoupled from its chaperone or gold standard and allowed politicians, both left and right, to basically spend as much as they wanted because there was no longer a chaperone to their currency. In other words, no longer a gold restraint. So politicians of all stripes could begin to spend and pay for their spending with money mouse clicked at a central bank at the Federal Reserve. And this allowed debt levels to become just extraordinary. So from 1970 to today, we've gone from less than a few hundred billion in US debt to over 38 trillion and counting. And it's absolutely essential to understand gold and to explain gold to others by beginning with what happens to debt levels and how debt levels, when they become this absurd, have a direct impact on currency and currency devaluation. And of course, as currencies fall, gold prices rise. And that is the leitmotif theme of today's presentation. And auf Deutsch, den Anstieg des Goldpreises vollständig zu verstehen, muss man wissen, welche Auswirkungen untragbar und unverzeihliche Schuldenstände auf Fiat-Geld haben. Diese Grafik zeigt den erschreckenden Anstieg der US-Schulden in den letzten 55 Jahren. This next graph shows that the sins of the US debt levels aren't really just an American problem, but a global problem. In just the last 30 years, global debt has gone from 37 trillion to well over 300 trillion. It's an extraordinary climb, again, because just like the US central bank, the major central banks of the world have no gold chaperone behind their currencies. And so those nations and their central banks can effectively monetize their debts with money created out of thin air. And this creates not only a US problem, but a global problem. And the graph here just makes this undeniable. And it's just something you have to visualize to really see. So leider sehen wir hier, dass die Krankheit der US-Verschuldung nicht nur eine amerikanische Krankheit ist, sondern eine globale Krankheit. Mit über 300 Billionen übersteigt die globalen Verschulden das globale BIP um das Dreifache. Now, Ernest Hemingway, the famous American Nobel Prize-winning fiction author, certainly wasn't a central banker or a politician. But this quote here, I think, puts the current monetary debt and currency crisis into very clear perspective. And it's worth reminding that, as he says here, the first panacea for a mismanaged nation is inflation of the currency. The second is war. Both bring a temporary prosperity, both bring a permanent ruin, but both are the refuge of political and economic opportunists. So I want to keep this theme of debt crisis leading to an inflation of the currency and the temporary prosperity, but also the risk of war. And I want to focus on this theme of economic opportunists as well. And I'll say in the German, just to put this into perspective, hier die amerikanische Autor Ernest Hemingway sprach weitaus ehrlicher über Schulden als jeder andere Zentralbanker vor oder nach ihm. Er warnte vor vielen Jahren, dass alle verschuldeten Nationen von wirtschaftlichen Opportunisten geführt werden, die ihre Währung unweigerlich für kurzfristigen Vorteile oder wie er es nannte, vorübergehenden Wohlstand abwerten. Er warnte aber auch, dass das Endergebnis immer dauerhafte Ruin sei. Und diese Ruin komme in Form von Währungsinflation und Krieg. And so we'll go to the next slide to put this into perspective. When we talk about the temporary prosperity that Hemingway discussed, we see the temporary prosperity in the U.S. stock market, which has a one-to-one correlation with the money printing at the central bank. Whenever the Fed or the central bank prints money, the stock market goes up, and that certainly creates a temporary prosperity for those who are in the stock market, which is usually the top 10% of a nation that hold 90% of the stock market wealth. So this money printing has greatly enhanced the top 10% of most populations, not necessarily the middle class, but we certainly see the temporary prosperity of currency debasement and mouse-clicked money in the stock market correlation to central bank policies on the left-hand chart. The middle graph shows what Hemingway also described as the permanent ruin of currency debasement. And all of the major currencies, the dollar, the British pound sterling, and the euro, as just examples here, have lost greater than 95% of its purchasing power since we went off the gold standard, and that's that middle graph. The third graph on the right just shows American presidents from the 1980s to today. That starts with Reagan and goes to Bush and Clinton, etc., Obama, Biden, and of course Trump. That whether you're a left-leaning or right-leaning politician, you're still an opportunist because they all have much greater debt than they have income. And here in these drafts, this isn't even to 2025, we see that U.S. debt is up 44x since the 1980s, but tax revenues are only up about 8 times since that same period. So the debt is certainly outpacing the income in terms of tax receipts, but the same thing would be true of GDP. So auf Deutsch, hier sehen wir, wie Hemingways Worte durch harte Fakten bestätigt werden. Auf der linken Seite sehen wir den vorübergehenden Wohlstand eines Aktienmarktes, der durch extreme Liquidität aus mit Mausklicks generierten Billionen offen aufgebläht würde. In der Mitte sehen wir den dauerhaften Ruin von Papierwährungen, die gemessen an Gold über 95% ihrer Kaufkraft verloren haben. Und ganz rechts sehen wir eine lange Liste von politischen Opportunisten, sowohl aus dem linken als auch aus dem rechten Lager, die ihre politische Popularität aufrechterhalten haben, indem sie die Verschuldung auf ein Niveau getrieben haben, das fast sechsmal so hoch ist wie die Steuereinnahmen. Going to the next slide, we see a little bit more history to prove that this isn't just Hemingway in the 1950s that's warned us of this. In fact, these are warnings by very clever folks from the 1500s, the 1700s to the 1900s, etc., that have been saying the same thing. So this is not some new system, or as they say in French, le plus ça change, le plus c'est la même chose, or immer wieder das Gleiche. And this fellow on the left is David Hume. And he warned in the 1750s that debt always destroys currencies, which always destroys nations in all empires, from Rome to Portugal under Philip II, etc., certainly later in France in the 1780s, the British Empire after World War II, etc., that when you get in debt too far, you debase your currency, and when you debase your currency to handle that debt, the empire goes from being supreme and hegemonic to no longer supreme. The fellow in the middle is a guy named Sir Thomas Gresham. He was an advisor to the Queen in the 1500s, and he told the Queen then that when you have bad money, paper money, circulating at the same time as good money or real money, that is gold, eventually citizens will save, the at least informed citizens will save in good money and spend in bad money. And this was a theme also acknowledged by Adolf Thiers, a 19th century economist, who said that eventually not only will you save in good money and spend in bad money, but eventually you'll replace the bad money altogether. So hier sehen wir, dass uns die Geschichte seit Jahrhunderten vor solchen Schuldenmustern warnt. David Hume links sagte uns bereits 1752, dass Schulden zuerst Währungen und danach Nationen zerstören. Thomas Gresham Mitte und Adolf Thiers rechts warnten uns ebenfalls vor Jahrhunderten, dass informierte Bürger irgendwann lernen werden, in echtem Geld, das heißt Gold, zu sparen und in schlechtem Geld, das heißt Papierwährungen, auszugeben. So when you think about these warnings of Thiers and Gresham, that eventually sophisticated or informed investors will learn that they will need to save in real money and spend in bad money, that this is something that's not just an historical thing among citizens, but it's also what we're seeing in real time today when it comes to central banks. Having looked at the debasement of the US dollar and the unsustainable levels of US debt, countries have begun, and central banks around the world have begun to stop buying US debt at the same levels. And beginning in 2014, central banks around the world were stacking more gold than they were U.S. treasuries or U.S. Debt. Now that trend in 2014 became exponentially faster in 2022 when the U.S. weaponized the world reserve currency. Whatever you think of the war in the Ukraine, Zelensky or Putin, to take a neutral reserve asset and politically weaponize it causes friends and enemies of the US dollar to look at that currency and that US Treasury differently. So it was no coincidence after the weaponization of the US dollar in 2022 that central banks began stacking and saving in real money far more than in paper money or US Treasuries or US dollars. And this graph just makes this obvious. A typical central bank was buying less than 118 tons of gold a year before 2022, and after 2022 and the weaponization of gold, we saw that central bank number reach 291 tons per central bank. And since 2022, central banks are buying more than 1,000 tons of gold per year. So this is a rapid and dramatic and not coincidental change in gold ownership by the central banks of the world. And again, as Gresham warned, once we see paper money losing its credibility and trust, you'll see folks, and in this case, central banks, starting to save in real money, which is gold. So heute sehen wir, wie die Zentralbanken genau das tun, wovor Gresham und Thiers gewarnt haben. Sie sparen in echtem Geld, nämlich Gold. Und seit die USA den Dollar 2022 als Waffe einsetzen, haben die Zentralbanken ihre Goldreserven um das Dreifache erhöht. Sie haben das Vertrauen in eine überschuldete und als Waffen eingesetzte Weltreservewährung verloren. This is a little bit more math going back to the same things of Adolf Thiers, who said that eventually when someone loses faith in their paper money, not only will they stop, saving it, they'll also just replace it altogether. And what's fascinating about this graph, and just to get back to what history has been warning us for centuries, we see this not in theory or in debate, but in real time. And in the case of the Chinese, which were historically one of the largest buyers, if not the largest buyers of U.S. debt, U.S. treasuries, and hence U.S. dollars, they are now completely replacing that money altogether. You see that as recent as 2012, the Chinese held 40% of their FX reserves in U.S. treasuries. Today, they hold less than 1%. So they're absolutely replacing U.S. treasuries and U.S. dollars with physical gold, which is the yellow line. So you can see that the Chinese, as a major buyer, are no longer buyers at all, and instead they're stacking physical gold, just as Adolf Thiers and Thomas Gresham warned centuries ago. China war einst der größte Käufer von US-Schulden und US-Staatsanleihen. Im Jahr 2012 zum Beispiel bestanden 40% seiner Devisenreserven aus US-Staatsanleihen. Heute liegt dieser Anteil bei weniger als 1%. Wie Adolf Thiers warnte, wird schlechtes Geld durch echtes Geld, gutes Geld, nämlich Gold, ersetzt. This slide is perhaps sensational, but it really is actual mathematically confirmed that we are, and you are, being robbed as we speak. And as I say here, it's not personal, it's business as usual by central banks. And I'm using the US as the example. In 1933, when President Roosevelt confiscated gold and then revalued gold basically overnight from $20 to $35, the US dollar lost 69% of its purchasing power. In 1971, when Nixon got off the gold standard, which he said 55 years ago or 54 years ago that would be temporary, he also said that your dollar would be worth just as much tomorrow as it was today. Well, 54 years later, that temporary decoupling from gold continues, and the dollar has lost more than 99% of its purchasing power when measured against gold. But that was a deliberate devaluation of gold, and in the first 10 years after the decoupling from the gold standard, the US dollar lost 70% of its inherent purchasing power. Today, with Donald Trump and the stablecoin legislation under the Genius Act, we see a similar problem with the arising of the stablecoin, which in my humble opinion, stablecoin is just a digital dollar that gives the US and the White House more power to control and inevitably debase the dollar in a digital form, which is much easier to do when it's in paper form. So whether it's 1933, 1971, or 2025, we see currency debasement as an intentional and deliberate policy. And it's also deliberate theft, because when the purchasing power of your dollar or currency gets weaker, you're getting an invisible tax. So die absichtliche Geldentwertung durch politische Opportunisten ist nichts Neues. Sie ist auch nichts anderes als versteckter Diebstahl. Als Präsident Roosevelt 1933 den Goldstandard neu bewertete, verlor der Dollar 69% seines Wertes. Als Nixon 1971 die Golddeckung des Dollars aufhob, verlor der Dollar in den folgenden 10 Jahren 70% seiner Kaufkraft. Trumps kürzliche Einführung von Stablecoins ist nichts anderes als ein verzweifelter Versuch, den Dollar zu digitalisieren, ihn in Zukunft noch besser kontrollieren und abwerten zu können. Now, here we're looking at what's worrying the wealthy, and we talk to clients, very wealthy clients in over 90 countries every day. And certainly one of the major concerns is geopolitics. And certainly, as an American speaking to you today, I can say in my entire lifetime, I haven't seen a period where the U.S. was not directly or indirectly involved in some form of conflict in the name of liberty and democracy and freedom. Cynically, I haven't seen much freedom. I have seen a lot of opportunism in U.S. foreign policy. But again, this graph from Iraq, Libya, Syria, Ukraine, Afghanistan, Israel, etc., is no surprise to anyone who's watching the headlines. But certainly, whatever you think of these conflicts or motives behind them, it's no coincidence, as Hemingway warned decades ago, that in addition to currency debasement, war was warned, and that is exactly what we're seeing. So, wir sprechen täglich mit vermögenden Kunden auf der ganzen Welt. Eine ihrer größten Ängste ist die Geopolitik. Kann ich Ihnen als Amerikaner einen Vorwurf machen? Wie Hemingway warnte, befindet sich mein Land direkt oder indirekt in Kriegen Ablenken oder Profit auf der ganzen Welt. Und für mich ist das wirklich ein Zufall. What's also worrying the wealthy, of course, is inflation. And this is no great surprise when we talk about temporary inflation or inflation being soluble or solvable. Certainly, we can have disinflationary forces like a great recession or a major mean reversion or retracement in the markets. That would be deflationary. But the end result to any crisis will be more money printing, more money supply expansion, and hence more inflation. And this, of course, explains why the gold price keeps rising. But in this graph, it really is no great shock or surprise as to why inflation is rising. The world money supply has grown by 5x in just the last 20 years. So, das andere Hauptanliegen globaler Investoren ist die Währungsinflation, genau wie Hemingway es vorher gesagt hat. Aber ist Inflation wirklich eine Überraschung in einer Welt, in der sich die globale Geldmenge in 20 Jahren verfünffacht hat? The next question when you're looking at these geopolitical risks and these inflation risks is where do you hide? And one place that many investors go to is the stock market. For us, a topping and very tired stock market is probably not the safest place to hide. Many would argue that equities rise with inflation, and so it's a potential hedge against inflation. But for many reasons, we see the risks in this very old and tired bull market in stocks as far too risky as a place to hide in the backdrop of inflation and in geopolitical risk. And we do believe in the power of mean reversion, that all markets eventually correct. This is a very old and tired bull market. None of us can time its end game. I would look at rising rates and recession factors, which could put an end to this bubble. None of us can time it, but all of us would agree that it is certainly a bubble by every measure. It is 7 times the global world equity index. It is, by every measure, price to earnings, price to book, overinflated and overvalued. Even Warren Buffett is hundreds of billions in cash because he can't make sense of the valuations in this market. So this is a dangerous place to hide. So, wo können sich Anleger in einer Welt voller geopolitischer inflationärer Risiken verstecken? Eine Option ist ein steigender Aktienmarkt. Für uns sind die Risiken einer Rückkehr zum Mittelwert in dieser von den Zentralbanken gestützten Aktienblase einfach zu hoch. Es handelt sich um eine massive, aber müde Blase. The other place investors could consider, of course, is the bond market. But in the U.S. Government bonds have lost 50% and have been the worst asset in the last 5 years. And when measured against actual rather than misreported inflation, Most government bonds give you a negative return. So again, and with more volatility and over-indebted sovereigns, including the U.S., their IOUs or promises or bonds to us are the last place you want to hide from geopolitical risk, inflation risk, or currency risk. So stocks and bonds to us are not always the safest place to hide. Wir betrachten Staatsanleihen nicht als sicheren Hafen. Inflationsbereinigt bieten sie negativen Renditen. Mit Blick auf die Zukunft macht ihre Volatilität sie noch unattraktiver und unsicherer. Of course, the other place to hide is gold, and we have a clear bias for gold for many, many years. In fact, for the last 25 years, while gold was outperforming the stock market, even a stock bubble, in total return, the professionals on Wall Street and at the wealth advisory firms, et cetera, have been telling us that gold is too volatile or just a pet rock that does nothing. We think that's a deliberate misunderstanding of gold for a number of reasons, but these graphs, which don't even go to 2025, make it very clear, as does this year, that gold is anything but a pet rock or a too volatile asset, and that it has outperformed even the most robust Fed-supported stock market in history. And there's a reason for that. But the fact that up until only recently, most banks and private wealth advisors have deliberately ignored and downplayed gold in portfolios is really unforgivable. And now even banks like Morgan Stanley are recommending a 20% allocation to gold. We think that's a little late to finally figure out gold, but I guess it's never too late to be right. But we've certainly been ahead of this by decades, and most of you in the audience have recognized gold's outperformance. It's just fascinating to see it happening so late because it's undeniable. It certainly is not a pet rock that does nothing. In addition to outperforming the stock market, gold has held its value over all fiat money during the same period. It's a far better asset to save in, and it's even now an outperforming asset to speculate in. But we don't look at gold as a speculation asset. So seit 25 Jahren erzählen Finanzberater der Welt, dass Gold zu volatil sei. Die Fakten bestätigt jedoch, dass Gold im gleichen Zeitraum eine bessere Gesamtrendite erzielt hat als der US-Aktienmarkt. Gold hat nicht nur Aktien übertroffen, sondern auch seine Kaufkraft weitaus besser bewahrt als jede Fiat-Währung. Daran wird sich nichts ändern und der Bullenmarkt für Gold steht erst am Anfang. Many are wondering if gold is overpriced or if they're too late. Certainly with the headlines this year, gold over 4,000 US dollars and climbing, that they've missed the rally or that it's too late to get in. Here I'm just showing in this slide that there have been many rallies in gold, including from 70 to 80. In fact, 1970 and 1980 went well past 640, it went to 850. But even at that number, it was a 1,700% rally. From 2001 to 2011, it was over a 500% rally. And from 2016 to today, we see that we're still not even keeping up with prior rallies. We're still in the beginning of a rally when we went from 1,000 to 4,100. So we are not at the end by any stretch of a rally when measured against prior rallies. And whether you're looking at miners or you're looking at physical gold, in this case, the graph on the right is miners, but gold is really only 1% of global financial allocations, and it has been for years. The moving average over longer periods can be as high as 5, 6, or 8%. So with gold as only a 1% allocation today, if gold were to go to a 5% allocation in portfolios, which we do see it doing, just that demand alone will send the gold price much, much higher. So it's very important to consider these data points if you think you've missed out. So viele befürchten, dass Gold überbewertet ist. Viele befürchten, dass es jetzt zu spät ist, Gold zu kaufen. Aber im Vergleich zu früheren Goldrallies steht die aktuelle Goldrallye erst am Anfang. Gold macht immer noch weniger als 1% der globalen Allokationen aus. Wenn dieser Anteil auf den historischen Durchschnitt von 5% oder mehr steigt, wird der Preis in den kommenden Jahren noch weit höher klettern. So what we've learned, and this is just the metaphor from hockey to polo, all the great athletes have always said, like Wayne Gretzky, that you never play where the ball or the puck is headed, or excuse me, you never play where the ball or the puck is lying, you play where it's headed. Otherwise, you play the direction of the ball, not where it's currently sitting. And certainly after very long periods of consolidation, the direction of the ball or the direction of the golden hockey puck is technically and fundamentally undeniable now for all of the reasons we've talked about, debt and currency debasement and a turning point in global trust for the US dollar and for fiat money in general, and the rise in the stacking of gold by central banks and the de-dollarization that is undeniable. The movement towards gold as a trade settlement asset, as a better store of value, or even as the BIS says, as a tier one asset, is no longer debatable. It is the direction of the gold. So this again is not a gold bug case, but empirical fact. So, wenn es Gold geht, haben wir gelernt, dass man eher auf die Richtung des Balls achten muss, als darauf, wo gerade liegt. Nach langen Konsolidierungsphasen bewegt sich Gold kraftvoll nach oben, weil das schuldenbelastete Papiergeld historische Bewegungen nach unten vollzieht, wie es die Geschichte immer wieder gezeigt hat. So, what do we know? What we know is gold is not an investment. So, was wissen wir? Gold is keine Investition. What else do we know? It's a historically confirmed yet deliberately misunderstood truth. Gold ist eine historische, bestätigte, aber bewusst missverstandene Wahrheit. Finally, we know that gold is a store of value. Gold ist ein Wertspeicher. Es behält seinen Wert besser als jede Papierwährung der Welt. So in this example of gold as a store of value, something that holds its value better than any paper currency in the world, we have a simple example. And sometimes the simplest examples are the best. The average American house in the 1920s was 5,000 US dollars. Today, that's about 500,000 US dollars for the average American house. But in 1920, 250 ounces of gold would buy you, at that price point of gold, at $20 an ounce, that would buy you a $5,000 house. In 2025, at the current gold price, those same 250 ounces of gold would not only buy you the average American house, it would buy you two average American houses. And what I'm trying to say is if you went back to 1920 and instead of saving in ounces, you just kept $5,000 in a can rather than 250 ounces of gold in a can, if you fast forward today and wanted to use your $5,000 to buy a house, you couldn't pay for the landscaping. But if you had saved instead in those 250 ounces of gold, those 250 ounces would be worth over $1 million. So you could still buy an American house, or even in this case, two houses. What we're saying here is not that the dollar or that the price of houses has gotten more expensive. It's that the dollar has gotten less valuable, and so you need more of them to buy a house. It's a very simple way of just showing that gold holds its value more than paper money. Einfache Beispiele machen Wahrheiten leicht verständlich. Im Jahr 2020 könnte man mit 250 Unzen Gold, die damals einen Wert von $5,000 hatten, ein durchschnittliches amerikanisches Haus kaufen. Heute könnte man mit denselben 250 Unzen Gold zwei durchschnittliche amerikanische Häuser kaufen. Hätte man jedoch 1920 statt Gold $5,000 gespart, würde dieser Betrag nicht einmal für die Gartengestaltung reichen. one more evidence, or more evidence of just how the dollar is falling rather than gold rising, is what a typical $1,000 amount of gold would buy over the years. So in other words, what could you buy with $1,000? How many ounces of gold? In 1913, the year the Fed came into existence, $1,000 would buy you 50 ounces of gold. By 1971, that same $1,000 would buy you 28 ounces of gold. And as of this year, $1,000 will buy you less than 1/4 of an ounce of gold. And again, it's not that gold has gotten more expensive, it's that the purchasing power has gotten weaker. The purchasing power of fiat money has been so debased, as Hemingway warned, that it will hardly buy you anything. So, diese letzte Grafik zeigt, wie viele Unzen Gold man im Laufe der Jahre für 1000 US-Dollar kaufen könnte. Im Jahr 1930 zum Beispiel könnte man für $1.000 50 Unzen Gold kaufen. Heute bekommt man für $1.000 ein Viertel einer Unze Gold. Und diese Grafik zeigt, dass Gold in den letzten 100 Jahren nicht an Wert gewonnen hat. Stattdessen hat Papiergeld in den letzten 100 Jahren an Wert verloren. So what are we watching? This graph is showing these little vertical gray lines. Those are recessions. And those vertical gray lines, those recessions, always occur as rates are rising. And we are very concerned about rising rates and recessions in the global backdrop and certainly in the US backdrop. Now, rising rates always occur when demand and trust in government bonds starts to fall. When government bonds are unloved or untrusted, there's less demand for those bonds. When there's less demand for bonds, the bond prices fall. And when bond prices fall, bond yields go up. And bond yields are just another way of measuring interest rates. Rising bond yields equal rising interest rates. And in a world drowning in debt, these rising rates are like shark fins. And they usually precede major recessions. And when there's a major recession, the need for fiscal stimulus, i.e., money printing, increases, and that leads to further currency debasement and further moves in the gold price. Sadly, gold rises when the rest of the financial system is falling apart. So we are definitely looking for rising rates. So was wir beobachten ist ganz einfach. Mit sinkendem Vertrauen in Staatsanleihen sinkt auch die Nachfrage nach diesen Anleihen. Mit sinkender Nachfrage steigen die Anleihenrenditen und das bedeutet, dass die Zinssätze steigen. Zinssätze sind die Kosten für Schulden und die Schulden sind zu hoch, als dass die Regierungen sie bezahlen könnten. Kurz gesagt, steigende Zinssätze zerstören schwache Finanzsysteme und Märkte. Ein Marktcrash führt zu einer Währungskrise und in dieser Hinsicht Gold wird steigen. So when it comes to gold, we've talked a lot about why it should be owned, but equally important is how it should be owned. And this is really where Von Greyerz as an organization and the thinking behind our service model really is significant. And since Egon founded this organization well over 25 years ago, he founded it under the principles of what he would want for his own gold, not just for client gold. It really began among a small circle of friends and family when he was making his first investments in gold. And what Egon understood very clearly are the parameters to our service today. First, physical gold is the only real gold. Paper gold, ETF gold is not real gold. It involves a daisy chain of intermediary and counterparty and operational risks. And one of the main reasons we hold gold is to stay out of the banking system, but ETF gold is completely tied into the banking system. And if you look at physical gold as an antidote to banking risk, why would you then want to own your gold within that system? So that really leads to the second point as well. Gold should be held in very secure, tested private vaults and not in commercial banks for all the reasons we've talked about in the past and years about banking risk and commercial banking risk and bank failure to deliver gold when needed most. And frankly, just the other sins that banks commit with derivatives and poor execution of liquidity on gold and silver when needed most. So the key is to have outside physical gold outside of that banking system in the best private vaults you can find. Typically, the best are bedrock below ground vaults, but equally important to having the best private vaults outside of the banking system is to be in a jurisdiction where gold is a protected industry and where client privacy is still a legally protected right. Not hiding private client sins, but respecting private client privacy is key. And Switzerland is a jurisdiction which, relative to others, still respects that privacy and still respects gold as a protected industry. Of course, insurance matters as well, and all of the gold held with Van Greyert's clients, which is fully segregated, fully allocated gold held in your own name, is also fully insured. In addition, our service allows logistics support so we can move gold anywhere in the world to and from the vaults. And because of our relationship with the refiners, where 70% of the world's gold is refined, we can buy and sell gold and convert it to local currencies the clients need whenever needed within 2 to 3 business days. So there's instant liquidity and there's fantastic logistics. And of course, finally, there's the experience of our team. We all come from pretty significant backgrounds in law and finance, banking. In other words, we know how the sausage is made, but we focus entirely on one asset, or precious metals, gold and silver. So our focus to clients and our focus on this particular asset class is key. And so zu wissen, wie man Gold besitzt, ist genauso wichtig wie zu wissen, warum man Gold besitzt. Wir sind der weltweit führende Anbieter von Goldlagerung, Dienstleistungen und Liquidität, weil wir wissen, was Kunden verdienen, da wir selbst auch Kunden sind. ETF Gold ist Papiergold, kein echtes Gold. Es ist mit zahlreichen nicht offengelegten kontrahenten Risiken behaftet und ein morales Bankensystem gebunden. Da wir enorme Bankenrisiken sehen, gibt es für uns keinen Grund, Gold bei Geschäftsbanken zu lagern. Gold sollte in Ländern gelagert werden, in denen es ein geschütztes Gut ist und in denen die Datenschutzgesetze streng sind. Die Schweiz ist zweifellos der beste Standort für den Besitz von Gold. Das in unsere Tresoren gelagerte Gold wird in den sichersten Tresoren der Welt aufbewahrt. Das Gold wird in ihrem Namen gehalten und ist vollständig versickert. Wir bieten Liquidität in den wichtigsten Währungen innerhalb von 2 bis 3 Tagen und können Gold an jeder Ort der Welt transportieren. Schließlich werden unsere Aufmerksamkeit für die Bedürfnisse unserer Kunden und unsere Expertise in diesem Markt weltweit geschätzt. So I thank you very much for your time and attention today, and I hope this was some use and understanding not only why gold is an essential asset, but how to hold it, and to give you more confidence that what we're seeing today is not this time is different. In fact, it's part of an historical cycle that historians and honest thinking fiduciaries have been warning for centuries. We are just at the end of another credit cycle, another currency cycle. That doesn't mean the end of the world, but it does mean the slow death of the inherent purchasing power, the inherent Kaufkraft of your paper money, and that you need to consider gold as life insurance for dying fiat money. Thank you again for your time.